Welcome back to Alpha Recap. The market's closed for the day, and we've got a packed recap for you. Defense demand and AI momentum. Set the tape, silver rallied, and health tech deals added a little rotational spice. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone! Great to be here. Big themes today: a defense driven outlook bump, renewed interest in AI related semiconductor names, and a pretty sharp move into silver. Lots to unpack.
Let's start top of tape. One of the big headlines was Lockheed Martin raising its outlook for 2026 after seeing growth in jets and weapons system sales. That's not a rumor. Management signaled stronger revenue and cash generation ahead.
Yeah, an outlook raise is what I'd call a management level confidence signal. They didn't give granular targets in the brief, but when a defense prime increases its outlook, it usually means backlog conversion is picking up and contract wins are landing.
Exactly. For listeners who aren't deep into defense lingo, backlog conversion just means orders that were sitting in the pipeline are now turning into actual work and revenue. For large defense firms, that often translates into steadier cash flow and sometimes healthier dividends.
And given the geopolitical chatter, it makes sense. Investors rotated toward defense names on that news, seeing them as less cyclical and more predictable on cash. Income investors especially took notice because better cash flow can support payouts.
Moving to tech, Nvidia finished the day up about 1.6% to roughly $191.52 on heavy volume, about 145 million shares traded. Not a monster price move, but the volume was the story.
Heavy volume around a bellwether like Nvidia is meaningful. It signals conviction, but also potential volatility. When the sector's North Star is trading actively, it tends to pull other chipmakers and hardware suppliers with it.
Quick explanation for listeners. When we say a bellwether drags the sector, we mean portfolio managers and index funds often reweight or hedge based on how that big name performs. So heavy activity in Nvidia can amplify moves in the whole semiconductor space.
Right. And the continued interest in AI hardware points to expectations for data center spending and infrastructure upgrades. If the heavy volume keeps up, we could see more sector breadth, or a sharp reprice if flows reverse.
Now the commodity story. The silver ETF jumped about 3.9% to roughly $105.53 on heavy turnover, about 178 million shares. That's a big single-day move.
Totally. That kind of move in a single session suggests either fresh inflows into silver as a safe haven or concentrated short covering. Given the defense headlines, it's plausible traders were rotating some risk into precious metals as a tactical hedge.
Important takeaway there, a one-day spike can be either the start of a trend or just a short covering bounce. Traders should watch if the flows continue over several days before declaring a full-on commodity rotation.
Let's pivot to credit and governance. Moody's affirmed IBM's A3 rating and moved the outlook to stable. That's a reassuring headline for bondholders. It reduces headline risk around refinancing and borrowing costs.
Exactly. An A3 rating is investment grade. Affirmation and a stable outlook basically say, Moody's isn't worried about near-term leverage or cash flow issues. For fixed income investors, that's a relief.
On the governance side, the National Association of Corporate Directors and Pearl Meyer reported a 3% rise in public company director pay. That's small on a percentage basis, but across many companies, it can add up as an SG&A item.
Yes, it's not going to topple earnings for blue chips, but if director pay climbs industry-wide, governance costs nibble at free cash flow. For governance-focused funds or dividend investors, it's a line item to watch heading into proxy season.
Shifting back to healthcare, there were a couple of commercial development stories. Renew Biotechnologies was named the clinical testing provider for Path Fertility's NOAA Guide, an epigenetic diagnostic for non-obstructive azoospermia. And Healthcare Triangle partnered with Better.Care to expand its health data platform across EMEA.
Both are examples of health tech maturing from research into rollout. For Renew, being the testing partner is an early commercial cue. If that diagnostic changes surgical decisions, test volumes can scale quickly. But the announcement didn't include financials, so we need to monitor adoption metrics.
And Healthcare Triangle expanding into Europe, the Middle East, and Africa enlarges its addressable market. Execution is the key. Pipeline conversions into contracts will determine whether revenue accelerates materially.
We should also call out sentiment signals. Google Trends showed searches for Amazon layoffs employees spiked to 20,000 queries, up about 600%. That's noise until the company confirms anything, but it can catalyze volatility in a mega cap.
Exactly. Search spikes are a flag. They tell you people are talking, but investors should wait for company confirmation before moving capital. Treat the spike as a prompt to check for official filings or statements, not as tradable evidence on its own.
There were also smaller operational items. Batteries, Plus launched a redesigned homepage and an Experts Plus learning hub aimed at boosting conversion. Practical for a retailer, but absent hard metrics, it's an optimization story rather than an earnings catalyst.
And an analyst note moved Bridgewater Bankshares price target to $24. Those changes can stir momentum in small caps, but that one lacked context. No prior target or the current price was included, so it's hard to trade off that alone.
Let's connect some dots across themes. Geopolitical risk has been acting like a funding narrative. It lifted defense contractors and likely nudged some allocations into precious metals as tactical hedges. AI hardware remained a liquidity magnet with heavy volume in Nvidia, and governance costs are creeping higher.
Also worth noting, health tech is increasingly moving from proof of concept to commercialization and international expansion. So we're seeing more partnership announcements and preferred provider deals, which can translate into near-term revenue inflection points if deployments scale.
Before we get to what to watch tomorrow, a quick explainer on why heavy volume matters. Volume is the number of shares changing hands. When you see an outsized volume day in a major name, it usually means a lot of investors are either agreeing on direction or getting out at once. That amplifies price moves and correlation across the sector.
And for silver, heavy turnover combined with a sharp price jump often means either a concentrated short covering event or fresh inflows into the ETF. Short covering happens when traders who had bet against the asset rush to buy shares to close positions. That can move price fast.
Okay, what should listeners watch when markets reopen? For Lockheed, any follow-up detail on the magnitude of the outlook raise, revenue or earnings targets, or new contract announcements would be a major catalyst.
For Nvidia, keep an eye on whether heavy volume continues alongside price gains. Sustained heavy volume with upside would signal broader sector breadth. If volume drops and price stalls, that's more likely consolidation.
For silver, check whether those ETF flows keep coming, or if traders take profits. Multi-day inflows would validate the idea of a tactical commodity rotation. A single-day spike that fades could just be transient.
On the Amazon sentiment front, watch for any official company comment. No comment equals no confirmed news, and that should temper trading reactions. For IBM, investors might press management for more color on leverage and cash flow in light of Moody's call.
And for the health tech items, look for press releases or adoption metrics from Healthcare Triangle and Path Fertility. Those will turn announcements into quantifiable revenue signals if contracts or usage data appear.
Proxy season is also on the radar. Early filings may reflect director pay adjustments. Governance-focused funds will be watching, and any wide adoption of higher director pay could slightly pressure free cash flow for some companies.
Let's run through a quick rapid-fire recap of the day's movers so listeners have the headline numbers in one place. Nvidia finished the day up about 1.6% to about $191.52 on roughly 145 million shares.
The silver ETF jumped about 3.9% to about $105.53 on roughly 178 million shares. Lockheed raised its 2026 outlook tied to stronger jets and weapons sales.
Moody's affirmed IBM's A3 rating and moved the outlook to stable. Healthcare Triangle announced a preferred provider partnership for EMEA expansion, and Renew Biotechnologies will be the clinical testing provider for an epigenetic diagnostic from Path Fertility.
Amazon search interest in layoffs spiked to about 20,000 queries, a 600% jump, though that was unconfirmed. Director pay rose on average about 3%, according to the NACD and Pearl Meyer, and an analyst raised Bridgewater Bankshares price target to $24.
All right, let's wrap with 3 clear takeaways. 1. Defense demand is back in focus. A Lockheed outlook raise suggested stronger backlog conversion and drove sector rotation into industrials.
2. AI hardware is still a liquidity magnet. Heavy volume in Nvidia reinforced how chip-related names can dominate flows and amplify sector correlation risk.
3. A notable silver bid suggested tactical flows into hard assets, but it will take multi-day confirmation to call a sustained commodity rotation. Also keep an eye on governance and health tech commercialization as secondary but meaningful themes.
If you're positioning, let those themes guide your sizing and risk controls. Look for follow through in volume, official corporate disclosures, and contract level details that convert headlines into real revenue.
That's our recap for today. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next close to break down the tape again. Until then, keep your allocations intentional and your risk controls tight.